There is just no way to sugarcoat that Q1 2025 for the domestic box office was absolute trash this year. $1.42 billion. And in this video, I'm going to give you my estimates of how that is going to affect AMC's net income and cash burn. If that is of interest to you, stick around. Let's get right into it. Over the past several months, the entertainment industry has been agonizing over this question: is the box office problems a supply problem or a demand problem? And I think the answer is pretty much it's been a supply problem. The studios did a horrible job of filling Q1 with film titles that people wanted to go see. And even the ones that we thought people might want to go see just did not perform well this early part of 2025. The good news is we expect things to start getting better in Q2. My personal expectation is they start getting better around Memorial Day weekend towards the end of May. But we have Minecraft and Sinners in April, and hopefully those exceed my expectations. I'd certainly take a beat over what I'm expecting on those movies, and I hope y'all go support them. We are going to talk numbers in this video, so please don't get mad at me and say I am being overly bearish. The numbers are the numbers. All I do is report them and give you guys my thoughts on how I am trading relative to those numbers. And if you've been following my channel, you know that I sold my AMC position in early November 2024 after the earnings announcement, after the announcement of the Go plan, and based on my disclosure to you guys that my cash flow analysis predicted a dilution event in December, which is exactly what happened. Now, I got out in November at a break-even price of the position I had been building in the couple months before that. So I did miss out this little blip up to 560. I would have preferred, obviously, to sell at a profit, not at break-even. But I was not worried about trying to capture any upside gains. I was more worried about exactly what's happened over the last 4 or 5 months, the price dropping by 50%. Based on the company needing to raise some cash. Why did they raise cash? Because they knew, just like I was forecasting, that Q1 was going to be a cash burn quarter. Just not enough movie titles, not enough box office for the company to operate profitably in Q1. And they wanted to front load cash while things were still relatively good ahead of the expected Q1 cash burn. So if you follow my channel, you know I have not had any AMC position at all since November 2024, and I've avoided a 50% walk down in price. I am carefully watching the industry, the box office, and what AMC is about to do next in the next several weeks before I decide to contemplate taking another speculative swing at this stock. And there are some key things that I'm still waiting to hear from AMC before I decide to give this another try. I need answers to the risk management things that I am watching. As we think about what AMC is going to report in terms of net loss and cash burn, when we find out the numbers in early May, the closest, most recent example we have is Q1 2022, where the box office domestically came in at 1.3 billion. And so I have that on the far right-hand side just as a comparison. And then in the 3 middle columns, I have the $1.42 billion current Q1 domestic box office and 3 different scenarios of AMC's market share capture from a low of, let's say, 28% of this number to a high of 32%. And keep in mind those percentages I'm extrapolating out the global box office when I'm looking at these numbers. I just use domestic as a proxy to calculate my spreadsheet numbers. For the most bullish case, obviously, we would want column M here with the 32% market share. I can't tell you where it's going to come in, and I learned a couple years ago that I can't forecast this perfectly. So I give you guys kind of a low, average, and a high number, and we'll see where we come out. I really don't have a firm idea, so we're going to use a low to a high number for estimating AMC's net loss for Q1. These are estimates, not guarantees. So always do your own DD and take everything here with a grain of salt. I'm doing the best I can with the historical data I have and the formulas that I've created that are as predictive accurately as I can make them. I'm expecting total revenue to come in somewhere between 711 and $812 million. When we factor in all of the expenses and interest, I am anticipating that will yield a net loss of between negative $275 million and negative $250 million. Compare that to Q1 2022, it was negative $337 million. If my spreadsheet is way off or AMC does even worse than we anticipated, could it go higher than the negative 275? Could it go higher into the 300s? Possibly, but I don't think it's going to be quite that bad. So I'm going to say between negative 250 and negative 275 million. And let's hope that it's not any worse than that. And we can also hope that it's better than that. We will find out in about 5 weeks. In terms of cash burn for the quarter, if AMC has a CapEx around $60 million, and I don't know what it's going to be with the Go plan, but let's just use 60 million as a rough estimate for estimating cash burn. I'm going to guess somewhere around $300 million of cash burn relative to this quarter. Plus, remember, we had liabilities stacked up at the end of Q4 that are also going to come due and be paid in 2025 here in Q1. And so the cash burn that we end up seeing could be even considerably higher than $300 million. At the end of last quarter, at the end of the fiscal year, AMC ended the year with $632 million of cash on the balance sheet. They raised another $180 million or so that we know about so far with the equity raise they did in December. And if we factor in, say, a $300 million cash burn, that's going to end up, when we add the equity raise and subtract the cash burn, getting them somewhere probably between $400 million and $500 million left of cash on the balance sheet. And I'm hopeful that it ends up closer to $500 million than $400 million. The big question on everybody's mind, and I think it's a valid question, it's not bearish to look at numbers and ask questions and think about risk management. The big question on everybody's minds is, what is AMC going to do about running this low on cash and thinking about the next several quarters being better than the one we just got through, the punishing Q1? Are they going to say, you know, let's roll the dice and hope that we have positive cash flow for the rest of this year? Or are they going to be a little bit more cautious and, you know, maybe think that they need to raise some more money? I think that is a valid question to ask. And it is one of the reasons that I have still not bought AMC even at these seemingly very low prices. Remember, the company typically has their annual shareholder meetings in June, which means that we probably would expect a proxy statement being sent out in April, early April, probably. In fact, maybe even in the next week. And I think that will be our chance to get a glimpse into what the company's strategy and or thinking might be around any necessity perceived on their part to need to raise additional cash. Why the proxy statement? Because if you factor in the shares that are reserved for the convertible bonds that AMC has, they are effectively out of shares. So it would be very difficult for them to raise more cash without coming to shareholders and asking you for a vote to, in some fashion, increase the amount of shares that they can sell down the road in the future if they decide that they need more cash, or just to have that safety net of the ability to raise more cash. Whether they decide to do it or not is going to depend on future cash burn if it happens. There are some other ways they could get around asking shareholders to do a vote, and that would involve things like maybe taking on more debt. Kind of a bad solution because you undo all of the work they've been doing to improve the balance sheet. So I think taking on more debt is a less likely scenario. It's still possible if they get boxed in a corner. And the other scenario they could do is anything with the preferred shares, because they could issue preferred shares, their blank check, preferred stock. They can do literally anything they want with them. I'm not talking about a repeat of ape. They can come up with whatever creative solution they want, and they don't need your permission to utilize those preferred shares. So that is another way that they could raise money, and that would still be dilutive to common if they were to issue preferred shares. I don't know what they're going to do. I don't know if they're going to do anything, but I do want to see what is on the upcoming proxy statement before I make any future trading decisions on what I want to do with any potential investment in AMC. I can be as bullish as I want about the next 3 quarters, but I view management as being very cautious about how they manage cash and liquidity. And it is a risk to the company to have no cash raisability. So my expectation is they will do something. What is something? I don't know. I can't tell you. But I'm waiting to find out whether I am correct or incorrect before I make any further decisions about what I might do about any speculative future trades in AMC. So that is where I'm at. We will find out here in 5 weeks or so what the numbers look like. Is it going to be somewhere around $250, $275 million loss? Do you guys think it's going to be better or worse? I know there are a lot of people telling you, don't worry about this bad quarter. The rest of the quarters are going to be really, really good. Maybe so. I sure hope so. I'm doing my part to go see movies, even though I don't own the stock, because, you know, those of us that care about film and cinema and the movie industry as a whole, we support the film industry. We go watch movies. But the numbers of Q1 are still going to be impactful to AMC, and it is still something that management is going to be thinking about, no matter what any YouTuber or person on Twitter tells you to not worry about it. I do worry about it. And I'm going to wait and see what happens, and I will let you guys know if at some point in the future, maybe after the proxy comes out, how I'm feeling and if I change my mind about a future investment. That is my own risk management decision. My risk tolerance might be completely different than yours. I don't care how you trade the stock. Make sure you understand your own risk tolerance and your risk exposure and make your own choices. If you have any questions or comments, drop them for me down below. I am Tony Denaro, and I will see you on the next video.